Welcome back to my channel here at Trades2G. My name is Sammy. Today I'm going to be talking about the bullish and bear thesis on Bitcoin. Now before I get to the TA, please like and subscribe to my YouTube channel. Like the video. The more you like, the more I provide this sort of content. So let's get straight into it. I have some good news and bad news. The good news is that there's a completion alt-bat harmonic at 68,576. Was that the good news or bad news? Well, either way, the good or bad, this is bad in terms of where price might end up going. The good news is that if this price action does end up going to the golden ratio, if and only if, then we're going to make new higher highs. Not financial advice. But typically when we have these harmonic plays, which I love, I like playing harmonics 80% of the time when I'm trading in the markets. Harmonics are a way to foresee the future of price action. Do they always pan out? No, not all the time. Just like patterns. Patterns don't always pan out. You can have a head and shoulders formation, and then the next day, a company gets bought out and price goes up. Then that head and shoulders completely just nullifies the pattern, right? You have these scenarios that take place, but it doesn't always pan out. But if it were to pan out, harmonic trades are one of my favorites, because there's phases after that have to take place, and if those phases pan out, they're one of the best trades that you can make a pretty penny if you learn harmonic trading. So long story short, I have a harmonic completion at an important pivotal zone, which is the golden ratio zone, the golden pocket, where price action will likely bounce if and only if we were to come back down and get this completion going. That is something to see in the future. It's not always going to pan out, but it's interesting to see. Now, if it does back here, and real quick, end the harmonic segment, if we come back here, think of it as new liquidity. Price action comes back down. It's making lower lows. New liquidity is going to enter. New people are going to put money into this market because it is at it's at a discount. It's at a discount. The world is not ending. People like to buy at lows and sell at highs. I personally would invest in Bitcoin if it does come back down here. That's just the way it is. I also want you guys to see something on the monthly. So we're ending the harmonic segment, but now I'm going to talk about the RSI segment. So here we have arches on the RSI. It does look like a head and shoulders, but not fully, because the left shoulder is like it is literally above the head. But watch what happens when I turn it into the Heikin Ashi. Does that look cleaner? Heikin Ashis are a way to smooth out the trends, clean out the noise, compared to the normal candle structures that you see on your day-to-day basis. Heikin Ashi smooths candle structures. If you notice on the RSI, if I go back to the regular candle structure, notice how the RSI is almost flattening on the bear zone. It's almost like the exhaustion is almost, and it looks like it's exhausted, and it's about to flat out on the 70 zone. But if you turn it over to the Heikin Ashi, that would also in line with the right shoulder of a head and shoulders pattern. Do you see it now? Yes. Now, it's still very bullish. Bitcoin is very much bullish. Don't get it twisted. Bitcoin is very bullish, but it just tells you in the future, potentially, the exhaustion is in after we had a massive rip for so long. Bitcoin needs to have a clean retracement, at least a healthy one, because look at what happened when we had a huge retracement from 2021. From this peak, you made a new higher high, which was approximately, what was that? Approximately a 600% move to the upside. 600%. And it's okay if we come back. But I just want you guys to see the bear thesis of where price action or where Bitcoin might end up going to if it pans out. Now the bull thesis, and this one's very quick. I drew Fibonacci extensions to see future price potential profit targets where institutions and retail end up taking. Fibonacci extensions are a great way to foresee exits in support zones. You can even use them as entries. Fibonacci are a great way to see what other people are going to see as well. Well, how do we know? Well, if you look at this previous liquidity zone where we had price action consolidate sideways, you can see sort of resistance and support. So if you notice here, I drew it for you from this previous impulse. It's on the I drew it on the 3-day, but I turned it down to the daily. You notice that price action seems to be rejecting this Fibonacci zone, but every time we went above it, we used it as a support level and hit the next target up. Then profit target took. You break that back test, came back up, rejection, came back up, rejection. You break out, you test it, it failed. Come back up, rejection, but you break out, now you took profits. Rejection, rejection. So extensions are a way to see future potential exits and entries for retail and institutional traders. But if this is the case, then we are seeing full profit target at the 618, which is a 100% mark at 135,000. At 135,000. That's the bull case for Bitcoin. I love it. Bull or bear case, it doesn't really matter. Bitcoin's not going anywhere. But at least we can see the future, potentially see the future, where price action might end up leading to. And this is how we can have some little foresight in price action, and we can maneuver or, play the trend, what we see in front of, play the data, what's in front of us. But we have an idea, a speculation of what to expect. So, thank you so much for watching my video. Like and subscribe to my channel. Like the video. Like I said before, the more you like, the more I provide this sort of content, the more I get better at this stuff. So I'm just starting off, but I love what I do, and I love providing content for you guys, and I love educating. So have a great day, guys.